Hi guys, welcome back to my YouTube channel. In case it's your very first time, you're most welcome. I know it's been a minute and trust me, I miss you guys. Now today I'm going to be sharing with you a number of investment ideas where you can keep your money and it grows passively without you directly investing it in a business. Now this video applies for everyone. If you're a student, if you're in your 20s, if you're in your 30s, if you're just beginning your career at a job, if you are a CEO, this video is for everyone. And I want to be honest with you, these really work. I was very surprised when I was having a conversation with someone, a friend of mine, and they told me they had never heard about some of these things. Now, I want to open your eyes when it's still early. If you are a student, I want to let you know that these are things that you can invest in your money, and they are real and they work and they grow your money. Okay, your money is at less risk, but again it's growing. Now I hope you have your pen and paper ready, because I'm going to be giving you at least 5 investment ideas where you can keep your money but it grows passively. Before I actually begin, I hope you've joined the family by subscribing. I would really love that. And yeah, let's get into today's video. The very first one is like a term used for the many that I'm going to mention, and it's money markets. Yeah, money markets are a type of unit trust insurance, and they are low risk investments that have a certain amount of guaranteed return. With money markets, we have a number of options that you can choose from. The first one are unit trust funds or umbrella trust funds, and with these ones your money earns an 11% interest per annum. That might sound ridiculous or unbelievable, but it's actually true. Okay, a number of people have invested their money in unit trusts and they have actually gained something. Just imagine you kept 10 million at the beginning of the year. How much would you be earning by the end of the year? A certain amount of money. Now it's different from if you just kept your money in a bank waiting for it to accumulate to a certain amount as you're saving, and then you buy something. With a unit trust, by the time you choose to pick this money and invest in something or buy something for yourself, the money has accumulated something. Okay, now these ideas are all meant to help you keep your money somewhere and it grows passively while you're still deciding on what exactly to do with your money. Okay, umbrella trusts are really good because people benefit from them, and if you haven't heard about them, you just comment down below in the comment section and I'll explain further. Okay, the second ones are treasury bills and bonds. Treasury bills and bonds are government securities. The government uses these securities to either get money from the economy, from the people, or to give money to the economy. In situations where the government wants to get money from the economy, from the people, they'll sell treasury bills and bonds. Yeah, so that the people buy them and they get bonds. Yeah, and in return, the government is basically regulating the circulation of money in an economy. What's the beauty about them? Treasury bills are short-term government securities and treasury bonds are long-term government securities. If you're to buy a treasury bill, it might mature in a year's time, and if you're to buy a bond, that could be a 5-year bond or 20-year bond depending on the available bonds. Now the beauty about treasury bills and bonds is that they also earn a certain interest rate, and the interest rate begins from like 5%. Yeah, just imagine you decided to keep a certain amount of money to buy a treasury bill and you are earning at least a 5% or more. You see, 5% is like the minimum. Now instead of you keeping your money somewhere and it's just, I mean, in the bank account doing nothing, it's better for you to actually buy that bill because you're not looking forward to using that money, right? Now that would be also a good one for you. Now for the bonds, treasury bonds usually have better rates because, I mean, that they are long-term financial securities, and the longer the time that you take for your bond to mature, the better the rate. So every time you're looking out to buy treasury bills and bonds, it's better to ask, let me say you are buying them using a bank, it's better to ask clearly what rates are there for the different maturing periods. That's also another venture that you could look at. The third one are fixed deposits. These are usually given by banks and also insurance companies. I think they also have that option. Now, fixed deposits are where you have a certain amount of money and you want to deposit it in a bank account, and then the bank is going to use your money for, let me say, their business lending, but they're going to give you a certain interest rate for a given period that you choose. It could be like, I have my 10 million Uganda shillings and I want to fix it for a period of, let me say, 6 months, and I want the bank to give me this rate. They usually begin from like 5% still, okay? Now, given your bargaining rate, you're able to get a realistic rate. Now, this is also another venture. Instead of you choosing to keep your money in a bank account doing nothing, it's better to at least fix it. But like I've been telling you, from the different options. Now you can look and compare which one is better. Actually, you could even go to the internet, Google, and ask which ones are much profitable depending, okay, so that you make a realistic decision. But one thing I want to assure you is that these are good investment ventures for a person who is not yet sure where to keep their money as they look forward to buy something or invest it in something. Now, another option for you would be investing your money in stocks, and stocks are merely shares owned by individuals in companies, yeah. And when you invest in stocks, you get dividends. So the more shares you buy in a company, the more dividends you're going to get. But the difference with this one is that if a company makes a profit, you people who own shares in the company are going to benefit so much. But also, if a company makes a loss, you people who own shares in the company are still not going to benefit that much. So also, stocks are a good idea for you to invest your money, but you're not guaranteed to earning something. You only benefit if a company makes profits, okay? But also remember, the interest rates are not usually so good, yeah? Still, it's a good option. Last but not least, there is something called private equity. Now, this one is for people who actually have a lot of money. If you're a big company and you have money that is seated somewhere, you're not using it, private equity would be something you would look at. And private equity is basically you choosing to invest in someone else's business fully, so that you see it grow, and when it works out, when it earns profits, you're benefiting from the profits. The people you are investing in have to bring back returns to you. Now, this is also a good venture for people who have a lot of money, because investing in a business needs really a lot of capital sometimes, depending on the business, okay? Of course, there are businesses that don't need a lot of capital, but for very big businesses, you need a lot of capital. Finally, there are a number of insurance policies that you will come by, and these are usually recommended by insurance companies. I don't know if you've heard about the 5-year policies, where you invest your money and they're supposed to, you're supposed to pay a certain amount every month, and in 5 years to come you get a certain amount, but still it has also grown at a certain rate. That would be a very good idea for everyone to invest their money in an insurance company, because if you think about it, in 5 years to come, where are you going to be, okay? If you choose to, let me say, save a certain amount of money every month to an insurance policy, okay, by the time the 5 years elapse, you who managed to save up this money and the other person who didn't, trust me, most likely you'll be more or less the same. But the only difference will be that at least you managed to put aside some amount of money that you plan to use for something realistic, and in 5 years to come, most likely you've figured out what you want to do with the money, okay? And even if you haven't yet figured out, there's so many people out there who you can make research from, or ask them, where exactly would you invest your money profitably. Many times you find that people visit your companies and they tell you about insurance policies, and you're very discouraged to actually take them on. But I would encourage you to do that, because instead of you using the money for something else that you may not see 5 years to come, it's better to keep the money there, so that in 5 years to come you can actually be proud of yourself that you managed to keep that money there. Okay, I hope this video has been insightful for you. I hope you've benefited something. If you feel there is something I need to tackle more still in this conversation, the comment section is there for you to say something. I'd love to hear from each one of you. But if you want to have a one-on-one conversation, my contact is in the description box, and also you can email me. Still, my email is in the description box. Okay, and thank you so much for watching this video. I love you so much, and don't forget to work hard and always have good intentions. See you guys in the next one. Bye.